Oct3.com.
Hello, this is Daniel Grady with a brief look at the markets for today, Thursday, October 3rd. A quick reminder that this is for information purposes only, does not constitute financial advice, and trading within leveraged instruments can have a high level of risk. We'll start by a look at the economic calendar for today. There's not much news that will have a major impact on the market scheduled. The only thing to look out for is at 1:30 GMT, the initial jobless claims from the United States. Moving on to the markets, a quick look at the S&P 500. The market closed down 0.1% yesterday, and futures are also trading slightly downwards, which means we're looking at a neutral to risk-off environment for the market. And the FTSE 100 is also continuing a short-term downtrend. Ironically, this is most likely due to a series of positive news coming out of the United Kingdom recently, which is leading investors to think that the Bank of England could start tapering off its quantitative easing program. In terms of the euro, there was a brief spike yesterday. This was in response to the forward guidance that the ECB president, gave yesterday in a press conference, and also the confirmation of the Prime Minister of Italy in a confidence vote. Often after a large move like this, we have a brief correction. That correction can also be today, but the overall trend for this pair continues to be upward following positive news out of the European Union and a general weakness in the dollar. That weakness in the dollar is also reflected here in the Japanese yen, the Japanese yen pair. As expected yesterday, the pair bounced off a support level at the 23 Fibonacci level, and we could expect it now to be targeting up here at the 50 retracement level at 98.30. Moving on to cable, the pound continues to trade within its channel, but if we look closer in the hourly chart, we can see that the pair has tried to on two occasions to break through the 62.50 level and has severely struggled, which means that even though the overall trend for this pair continues to be upward, we might be looking at a short-term correction at this level. Finally, we have gold, which continues its downward trend since the end of August. As we said yesterday, there would most likely be a correction following this large move, bouncing off the 38 retracement level and this support level. This is most likely a short-term correction. However, something to keep in mind is that as the debate in Washington continues to extend, and it might start to turn into a debate about raising the debt limit, which will become important on October 17th, investors might start looking for safe havens such as gold, and this could break out of this trend that it's been maintaining since the end of August. Anyway, that's it for today. Thanks for watching, and happy trading.